What is up, guys? Dirk here. In this video, I'm going to update you once again on my Bitcoin trade setup idea that I have been sharing for just over a week now. We have got the Federal Reserve that just raised interest rates to the highest level in 22 years, actually. It's pretty nuts. So there are some developments. Things are looking good. I want to update you in this video. Just a quick reminder, there is less than 48 hours left to take advantage of my special offer to join my VIP membership. It expires at midnight Eastern time this Friday. Okay, so if you want to take advantage of the special offer, it's the lowest price that you'll be able to join for. It's the most amount of content and bonuses. It's fully backed by a 60-day money-back guarantee. So you can sign up today, go through everything for the next 59 days. If you're not happy, let me know. You can get a full refund within those 60 days. But if you want the special offer, you have to sign up before midnight Eastern time this Friday. The link is in the description down below. Okay, let's start with first things first. Yesterday, the FOMC decision was a rate increase by 25 basis points, 0.25%, which takes the interest rate to the highest level in 22 years, which is pretty insane. This was the consensus. The market was pricing this in, and that is what we were looking for. It means that money is now getting even more expensive to borrow. Now, what is also important is the statement behind that. Okay, that's always the most important part of the market wants to know. What are they saying? What do they expect going forward? Do they increase rates even more? Are they planning on cuts, on pauses? And basically, the result of this was that there is expectation that the inflation needs to remain low, and they are probably going to increase rates at least another time, maybe multiple times. So there is no talk about cutting rates just yet, and that is very important because you can see over here, this is basically the bond market, how that works. It tends to put a percentage expectation of what the next decisions are going to be interest rate wise, and that was like 99% that we're going to do a 25 basis point yesterday, and that is pretty much exactly what happened. So you can see on this chart over here that Benjamin Cohen shared into the cryptoverse here, you can see what he shared, that we're looking at not expecting a rate cut till potentially March of 2024. The reason why this is important is because the global market crash that we saw in 2001 and in 2008, that does not happen until after the rate increase cycle peaks. Okay, that is when the real recession comes. Look at this chart, okay, and this is obviously from the Fed themselves. You can go and check this out yourself. This is basically the interest rate, the federal funds rate, going back all the way to 1955. And you can see here the vertical lines are the actual real recessions in the US. And you can see here what happened, okay? In 2000, you can see the rates have been increasing here, especially this last little bit, when that peaked and we started a rate cut cycle all the way to take the rates down. You can see that is when the real recession came. And if you overlay this, I've done this a few times already, I'm not going to do it now. If you overlay this on, say, the weekly chart of the US indices, the S&P 500, the Dow Jones Industrial, you can see that the real crash started coming after the rate cycle peaked. The same thing happened here in 2008. You can see the real recession came after the rate cycle peaked. It went up, 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 up when they peaked, and when they started cutting, then the crash came. So you can see here, we have been on this rate cycle increase, right? They've been increasing the interest rates for the good part of a year, I think over a year now. And you can see it's at the highest level here since 2001. I think they just raised it over this. So when this peaks, okay, and I'm not saying it's peaking just yet. That's why I'm saying it's so important to keep an eye on when this is going to peak and when the first cut comes, because that is probably going to lead to a major global market crash, a financial crisis, maybe a 1 or 2 or 3 year bear market in global financial markets. And that is important to keep an eye on. And this is very good to know, because if you can time this, imagine that you knew the markets were going to crash in 2001 or 2008. Imagine you would have gotten out of all your stock positions and your everything, really, like real estate, crypto, everything. Obviously, crypto wasn't around back then. But now, imagine we are going to get a crash sometime, who knows when it's going to happen, 2024, 2025. We'll see, obviously, closer to the time when those rate cuts come. But imagine you know when that's coming. You can get out of all your stocks, you can get out of all your crypto, your positions, and maybe you can even take short positions or put options where you're betting on the downside. And not only will you not lose then, you've taken your profits from your long positions, but you can make profits on the way down. And obviously I'll be sharing that as things go. But that is the idea here behind why I'm sharing this. And based on this historic data, you know, if we're going to get those rate increases still, and we don't get the first cut till March of next year, that means there is still upside potential for my theory to play out, which is the melt up theory, which means that we are not going to crash until after that first rate cut, which means we could still see those new all-time highs in the stock market, which I've been saying since the beginning of the year, since we got that golden cross on the S&P 500, that we can go higher, okay? We can get to new all-time highs. And then when everyone is starting to flip bullish, the headlines, the news headlines, the media, everyone's saying, oh, there's no recession, stock markets are healthy, we're at new all-time highs, everyone flips bullish, funds, retail, etc. That is when the rate cut comes, and then they rug it and we start everything a massive bear market. That is my theory. And the good thing about this is also that if this plays out, not only do we get stock markets to a new all-time high, but we probably get one major melt up in the crypto markets, which would give us our bull market, which is my theory. We front run the normal halving cycle. We start going higher towards the halving. We peak somewhere maybe in Q2 or Q3 of next year, earlier than most people expect. And if it just continues going higher from here too, and the theory would simply be that most people are going to be sidelined because they don't believe we're going to get a major bull market until several months after the next halving. Whereas if it comes now, most people are sidelined, maybe they're still shorting, and it's completely unexpected. So with that out the way, that's a kind of big picture macro theory that I have right now that I'm watching, and so far I've been right until this point, obviously until invalidation, but so far so good. Let's take a look at the Bitcoin chart and my long setup idea for Bitcoin. Okay, so I shared the original video. You can go and check that on my channel if you want, just over a week ago, with the idea being that we were going to sweep these lows. Now that is what we've gotten. Now you can see Bitcoin here is at 29,470-ish. And I had two possible setups for a continuation. Now, big picture, I am bullish on Bitcoin because the trends are just bullish. The high time frame trend is bullish. As long as we stay above the 200-week moving average, which is currently at about $27,000, then the trend is bullish. Continuation targets for me that I'm looking for is $32,400 and then $35,000 and potentially even as high as $48,000 later this year, but you know, one step at a time. So the continuation target is the idea. Now what we're looking for is a confirmation of an entry. And usually what we would get, one setup here that I'm looking for, which we are almost getting basically, is a sweep of the lows, right? We got that here, where everyone gets majorly bearish here at the lows, thinking it's all going to crash, and then a reclaim of this range. Now we got a little wick over here. We haven't quite gotten it yet. But if we get this reclaim of the range, it basically increases the chances that the low is in and that we are going to see continuation here to the upside, with the target being around 32,400. So a potential setup over here would be to be able to take a position, even right about now, a stop at the lows, targeting 32.4, right? And it's actually a little bit higher. You can see over here, 32.4, something like this. So this could be a potential setup. You can see it's about a 1 to 5R, which is already a good setup over here for long. But what I'm also looking on the lower time frame is you can actually see if we're going to get a pullback here first, right? And we pull back, say, to the Fibonacci golden pocket, you can get an entry there. Same stop, same idea, but obviously we get in lower, so the risk reward changes to a 1 to 10 risk reward if we get that pullback and this plays out in that way. So for now, I'm leaning towards the first idea. I am looking for a potential long entry, which obviously I will share in real time in my VIP Discord. If you're a member, obviously I will continue to update there. If you're not yet a member, join through the special offer. The link is in the description down below, and you can get insights to these real-time updates to this trade idea. Obviously on YouTube, I can only do this, once a day or once every few days, and it's obviously not as real-time, and the markets change on the low time frame. So I'm still leaning towards this first idea. Obviously, if something changes here, there is still potential for a sell-off or drop to this lower level. But at this point in time, I think it's less likely. We'll have to wait and see. Ideally, what is even a safer entry here, waiting for the confirmation, is to get a true market structure break, which means you can see over here, lower high, lower high, lower high. So for a real safer confirmation with higher probability, is if we go up first, we get a market structure break, so we make a new high, Then we drop down and we drop to the fib golden pocket of this entire move, which is usually right around the same level it is now. You can see over here the range low, and then take the entry there, because that just gives more confirmation, more probability that this is actually a confirmed setup like this. Let's play it over here. 32.4, still the same 1 to 5. So basically what you're doing now, if you enter it now without that market structure break and confirmation, is it's a little bit more risky. Now the downside of entering on the pullback is that you don't always get that exact pullback. So if it goes up from here, there is a chance it just runs straight up to 32.4 and you don't get the pullback for the entry over here, which means that you would be sidelined even if the idea is right. So obviously that's something you need to weigh out for yourself. You know, what do you want to take? Either way, I think the setup is good. The risk reward is good. Even if it doesn't work out, you get stopped out. It's 1% of your trading account that you risk, that you lose when wrong. And when you're right, it's between 5 to 10% upside. It is a proven setup. There is a really good risk reward. So this is a setup I'm looking to take. And again, this is just a YouTube video sharing the broad picture idea. In VIP, I will update in real time when I actually take the trade. So if you're not yet in VIP, click the link, join us for the special offer. You know, you've got nothing to lose. It's risk-free for 60 days. Come and join us and let's see how this is going to end up playing out. So if you like this, smash the like button. Leave your thoughts in the comment below. What do you think of the setup? What are you looking for? Do you think it's valid? Do you think it's not valid? What are your entry levels? Would like to hear from you. You're welcome to share it down below. And just a final reminder, there's less than 48 hours to join my special offer for VIP. Click the link, sign up. If you change your mind within 60 days, you can get a full refund. No questions asked, no conditions. But you need to sign up now if you want that special offer. Otherwise, the price increase, you will be able to join in future, of course, but you'll simply pay more, so it makes no sense. Sign up now, click that link, and I will see you on the inside, and we will try and get this trade done as best as possible.